Hello and welcome. You tune into Buy Now Sell Now. I'm Ankita Saxena and with me is Kavita Thaplayal. In the next 1 hour, we'll get all your stock-specific questions answered. So please keep sending in your questions, your buying price and your holding period, and we'll get them answered by our experts. But before that, let's take stock. And you can see the number also flashing on your screens. So please keep writing in your queries to this WhatsApp number that's flashing right now. But let's take stock of how the market is shaping up at this juncture. Well, it's again a very, very quiet day. I mean, there's nothing much that's happening, a lackluster day coming in. But we do see some reversal that's coming in, at least as of Nifty is concerned. Nifty is very, very flat right now. We have ticked up 78 points from the day's lows, but 25,650 is what Nifty is holding on to. Nifty Bank has recovered more than that. It has recovered almost 400 points from the day's lows. Right now, that has also turned absolutely flat. Broader into the market, if you can pull up the mid cap and the small caps, the mid cap is trading absolutely flat. Actually, there are no moves coming in right now. Very flat moves, and small caps also trading with gains of 0.2%. So the entire basket is trading within a certain range. But as far as the sectors are concerned, the interesting thing to note is Nifty IT that is posting a solid reversal. 1.7% of uptick, that is what we are seeing. Now, this is on the back of the deal with Infosys and Anthropic. Now, remember, Anthropic had spooked the street, especially the tech pack, last week, whether it is the NASDAQ or back home, we did see that blowout coming in the IT stocks, and that has now reversed because of this deal coming through. So Infosys is trading 3% higher on the back of the deal. Even the mid-cap space, Persistent, HCL Tech, Infosys, Coforge, all of these are trading with gains of 1+%. So the entire IT pack is posting a solid reversal. PSU names are also doing very well, and FMCG is also holding the fort right now. So that's how largely the market texture looks like. But Kavita, it's time to get going with the show then.
Absolutely, and we have a lot of queries that are trickling in, and definitely once again the WhatsApp number especially, that's flashing on top of your screen. So note that number down and send us your stock specific queries, the name of the stock, the price at which you bought it, and the time horizon till which you want to stay in that investment. And we will give you a short-term, long-term, technical as well as a fundamental view. And the guests on the show today are Kunal Potra and Mr. G. Chokkalingam. Hi, morning, and okay, that's the WhatsApp number that you can just note down, 865-797-4571. But gentlemen, good morning and welcome to the show. And before I dive in and start taking our viewer queries, a quick tech check, Kunal. A good comeback. Can we say that for the markets?
Yeah, absolutely. I think good morning, first of all. Good comeback from the index yesterday, and I would say a decent kind of a follow through for the markets. Maybe the index may not be a true represent for the kind of price action which you've seen today, but the market breadth opening up. So the advanced decline ratio is almost 2:1. For the index, even after a minor gap down opening for both the Nifty as well as for the Bank Nifty. I think what matters over here is the sentiment starting to improve, and we've seen many a times that market sentiment improvement generally leads into a stable recovery for the indices as well as the overall market as such. So I believe now from here on, if the market breadth continues to remain positive, there could be a very strong indication that the markets can head up higher. There is a minor resistance for the Nifty at 25,750 mark, which also apparently coincides with the gap or the down gap or the upper end of the down gap the index had seen the last 3 or 4 trading sessions. So I think that's one level to watch out for. If we break past about 25,750 mark on the spot levels, that's where I would believe that we may see a better and a much more higher accelerated movement on the upside for the indices.
So that's a take on the market, but then quickly just let's look at few IT stock specific queries from our viewers. This is from Mr. Subrata Mukherjee, and he wants to buy. Okay, he is asking the right time to buy TCS, HCL Tech, and there's one more query from Mr. Sriram Raghuraman from Chennai. He's already holding 20 shares of that's KPIT Technologies, though that's average price is almost 550. He wants an overview on the stock. So let's talk about all of these three counters. Let's get them a technical as well as fundamental check. Chokkalingam sir, first I'll come to you. Let's discuss TCS, HCL Tech, right time to buy, and can Mr. Raghuraman, who's bought KPIT Technologies at an average price of 550, can stay invested?
KPIT at best is a hold. Technically, maybe 5% rebound could be there because the valuation wise, it is still stretched around over 30p on trailing basis. And as far as other stocks are concerned, I prefer Infosys. that also can possibly give 10-15% upside tactically from current level, because most stocks were beaten down enormously. Of course, one need not rush to sell today IT stocks, because they were beaten down heavily. There is a possibility of 10-15% on a rebound, but post that one can restructure and continue to hold stock like Infosys. That's my view.
All right. How excited are you about the tie-up that Infosys has announced with Anthropic?
Positive. Even before this, Infosys has announced several technological tie-up, and they also claim to have got into a lot of AI projects. So therefore, the stock can give even beyond 15-20% return. But however, I continue to maintain my view that the long-term wealth creation story is over in large IT stocks. Already they are growing at 2 to 4% in dollar term. And now with the AI, it may be 1 to 3% only at best in the short to medium term. That's for at least for 1 or 2 years, unless some other structural change happens favorably. But tactically, yes, that's a good opportunity right now.
Long-term story fundamentally is intact for large cap IT. Kunal, what's your take? Also, if you want to answer specifically on the stocks mentioned.
Yeah, I would believe largely that IT stocks and buying IT stocks at current levels is a better strategy, purely in terms of risk reward. I'll look at it in this manner. The news flow would keep on coming, good prices, good news. They would never come together for stocks, and specifically with the kind of sell-off which you've seen, a 25% broad correction for the IT stocks and almost like a 20-22% correction for the IT index is what we've witnessed in the last 10-15 days or so for the IT stocks. So I think in that context, it's going to be a good opportunity to try and chip in to these names. I would look at larger cap names. I think Infosys, HCL Tech, Tech Mahindra. These could be the best recommendations, which probably I think the investors could look at current levels, and specifically given the fact that these were the few stocks which were holding their fort in the last I think many months of the IT correction. So I think in that context, it's always better and safer to try and invest into the performing stocks and the ones which have been more strong and resilient in terms of market volatility.
All right, so that's the word coming in as far as the IT pack is concerned. That is in focus yet again, but this time round it's on the back of a reversal. But let's get a live caller on board now. This is Madhava who's calling in from Andhra Pradesh. Hi, good morning, Madhava.
Hi.
Thank you so much for joining us, and tell us what's your question.
Yeah, I want to know the short-term purpose for PG Electroplast and Samvardhana Motherson.
PG Electroplast and Samvardhana Motherson. What's your question? Should you hold or not?
No, I want to invest for 1 lakh for these two.
You want to invest for 1 lakh for the next 3 months, PG Electroplast and Samvardhana. Kunal, what's your view?
So I'm bullish on both of these names. I think PG Electroplast specifically, I think the stock is nearing a breakout. I've tracked the stock recently also. 624, 25 thereabouts. Suddenly this momentum slips out for PG Electroplast. So maybe I think you can wait for another 1% on the higher side. Let the stock break past about that 625 levels and give a closing. I think if that happens, we may expect the stock to come back into a good momentum breakout because it's nearing that resistance zone. And we've seen that the stock has tested this level almost 3-4 times in the past few days. So that indicates that it's trying to break out. I would suggest that either wait for a breakout confirmation above 625 plus levels for the stock to show signs of a confirmation, or in other cases, in case if the stock drifts down and comes say closer to 600 mark, then the risk reward could be a little bit more better to try and initiate a buy, anticipating the breakout on the upside. Samvardhana Motherson, on the other hand, I think it's been a fantastic trending stock. It's a classical trending move for the stock in the last 6 months to 1 year, a classic pattern of higher highs and higher lows. The only concern over here for Samvardhana Motherson is that the risk reward is a little skewed, maybe 1:1 for the stock price. So you may not go for a full quantity buy at current levels, but I would suggest buying 50% at current levels and wait for a dip, say closer to 126, 127 could be a good zone where you can look to buy the additional quantity, even if it's a short-term play.
All right, so that's Kunal's view on Samvardhana Motherson and PG Electroplast. But Mr. Chokkalingam, I'll get in your word as well. What's your view on Samvardhana and PG Electroplast, say for a period of 1 year?
Samvardhana is slightly stretched in valuation over 39 PE, but still one can hold for a year or so because it is a solid growth story, good quality of management. As far as PG Electroplast, I would not dare to buy at current level because recently the government has given license for nearly 40 license for EMS under PLI scheme. I think there is going to be a structural shake-up in EMS domain, in the sense there will be a lot more suppliers. Even L&T is getting into it. So here the valuation comfort is very important, and I do not have that kind of valuation comfort with PG Electroplast.
All right, so that's a take coming in on both of these counters, and with that, it's time for a short break. But then post that, let's keep continuing our viewer queries session. All you have to do is just send across your question on the number that's flashing on the screen. See you after this break. And we also have a live viewer, Mr. Jai Krishnan from Kerala. Hi, good morning, Mr. Jai Krishna. How are you doing today?
Good morning. Fine.
Hi, thank you so much for sending us your question. Our both guests can hear you. You can ask your question.
Yeah, my question is my entry level Maruti Ultratech and for 9 months with an expected target.
All right, sure. That's it. You want to ask anything on Ashoka Wilcon as well? Okay, so let's get you the right entry levels for Maruti and Ultratech Cement for 9 months. Kunal, I'll come to you first.
See, I think both these stocks are, I would suggest, a good buy at current levels. You might wait for maybe a little bit more downside, but I'm not sure that the downside could be a little bit more pronounced, because Maruti, for example, has gone through a decent correction from 17,500 plus levels towards a recent low. The stock hit 14,500 mark. It's a decent 3,000 point odd correction for Maruti. In the same vein, I think Ultratech Cement has gone through a decent uptrend, and the stock has been one of the strongest cement stock, I think, in the last 3 months or 6 months in terms of price performance. So both of these stocks are attractive at current levels, and I would suggest that if you're looking at a buy, you can look at a buy at current levels. Maybe buy 50% of your expected quantity at current levels, and in case if in the next couple of weeks, if there is any kind of a further 3% to 5% correction further, you may look to chip in with the balance quantity.
All right, that's a technical view from Kunal. But then, Chokkalingam sir, what would you recommend?
Ultratech is good to hold or even buy, but 9 months I am not sure whether it can give me a return, but definitely beyond 1 year it can give. In auto space, I prefer M&M to Maruti, because diversified segments and has been doing phenomenally well in almost all the segments, and also going for massive expansions. So I firmly believe that M&M can outperform Maruti.
All right, so that's the view coming in. Thank you so much. I hope your question was answered. But let's move on to the next question that is coming in from Vijay Kirti, who's writing in from Chennai. He says he holds 550 shares of REC. He's bought at 604 rupees. And as the merger is announced with PFC, what can be the best options? Should he book loss, switch to PFC? What should be the technical view for that? Coming to you, Kunal, need a technical view. Post the merger, he wants to know what is the best option. Should he switch to PFC, book his loss? He's bought it at 607.
Yeah, I think switching to PFC could be a better option, of course, because of the merger news the stock has seen. And I think when you look at this in terms of the relative chart, post the announcement of the news flow, rather pre the announcement of news flow, both of these stocks, they were moving in tandem. Post the announcement of news flow, you've seen PFC moving up higher, above the 200 DMA, above the 400 levels, and RSC somehow has struggled, at 350, 360 mark where it's trading right now. So that clearly indicates that we are looking at a stronger chart emerging potentially with PFC with respect to RSC. So that also I think is another reason why I would believe that you should make that switch.
All right, let's move on. We have another viewer on the phone line, Mr. Venkat Raman from Bangalore. Hi, sir. Good morning. How are you?
Very good morning. I am doing good.
Thank
I have
you.
a question on
Sure.
Ashok Bilcon,
Sure. Okay.
having 1,000 shares at the rate of 233.
Okay.
Good morning. Good morning.
Sir, can you reduce the volume or maybe put your television on mute and just talk to me on the phone? Yeah.
233.
Sure. Okay.
I just want a suggestion from the expert whether it's a good time to buy more
Okay.
or to sell.
All right. And you want to hold it for what? More than a year?
Yeah, maybe up to 2 years I can hold.
Up to 2 years. All right. Chokkalingam, sir?
Yeah. So last 3 years, revenue is quite stagnating. But then, to be fair to the stock also corrected a lot. I would say that one can hold. From current level, 15-20% return. 12 to 18 months is very much possible. So I would give a hold recommendation.
Fundamentally, it's a hold. Kunal, what would you recommend?
Well, yes, you can continue to hold on, but I would not suggest to average out the stock at current levels because what's happened is 2025 start when the stock had broken below 240 levels. That was the point when the stock had broken below the long-term moving average. And since then, there has hardly been any decisive breakout for the stock above the 200 DMA. So when you have a stock which is struggling since the last 12-13 months, it's difficult to preempt that when the turnaround could happen. I would suggest that you can look to buy once the stock confirms a breakout above the 200 DMA. That would be a point where a big turnaround could be at play for the stock.
All right, that was the last stock of the day, last question of the day. Thank you, Kunal and Mr. Chokkalingam. Thank you so much for joining us and answering all the stock-specific questions. We'll let you go on that note. And with that, it's time to pull down the curtains on this edition of Buy Now, Sell Now. Kavita and I will take your leave. Thank you so much for tuning in.